What's up, everyone? I am going to be making my way back to YouTube. At first, I wanted to get the group situated. We're going to talk about utilizing the tool belt that's in front of you. We have a mountain of tools, and I've had the pleasure of seeing many of you turn from helpless to self-sufficient when it comes to trading. A lot of you have really made a lot of progress and have improved your situations drastically. I get private messages all the time from you guys, disclosing your thanks and gratitude and all that. But trust me, the gratitude is all mine. You did it all on your own. All you did was utilize the tools that you collectively helped build up that we all utilize today. So moving forward, I just want those of you who feel a little bit lost, maybe you're a newer member in the group, regardless, if you're having trouble, if you're struggling, I promise there is a way to get out from underneath the rut. And it really just involves some minor tweaks to your psychology and maybe your trading outlook as a whole. So let's go ahead and take a look at the strategic front, utilizing your tool belt. Let's get into it. So I know you hear this all the time, but to increase success rate, follow these steps. Number one, the most crucial aspect of it is risk management. Now, what is risk management? Well, you've probably heard me talk about it a lot in the group and others as well. You probably hear it all over the internet and from famous traders that have found success. Risk management, risk management, risk management. It's very important. So risk management, basically, to break it down, the first part of risk management would be to identify risks. And when I say identify risks, I mean that pertain to your own personal situation. You are the only person that knows how much money you can afford to lose, how much money you can afford to put into a particular trade, so on and so forth. Only you know the answers to those questions. There is no such thing as a general risk for multiple people, unless you all, share a joint bank account. Now, it's crucial to understand that risk profiles vary for each trader, depending on factors such as investment goals, time horizon, risk tolerance, and financial situation. To identify risk tailored to your specific circumstances, consider the following steps. Number one, assess your risk tolerance. Determine how comfortable you are with the possibility of losing money on your trades. I'm sure you hear it. Never invest more than you can afford to lose. This is a very true statement. A higher risk tolerance may allow for more aggressive trading strategies, while a lower risk tolerance may warrant more conservative approaches. Perfect example of this is core versus specials. Specials is a more aggressive approach to trading. Core is a more lax and conservative approach, but they're two sides of the same goal. They both have different criteria, both have the same goal in mind to profit, but the way that we go about doing it with each method varies significantly. Number two, set your investment goals. If you don't have a goal, how are you ever going to know if you are reaching them or not? Define your short-term and long-term objectives, such as generating income, preserving capital, or achieving capital appreciation. Different goals may expose you to different types of risks. If you're in a position where most of us are, and your goal is to grow, then you're definitely going to want to approach this from a conservative mindset until you get your bearings enough to take bigger risks and risk more larger chunks of your portfolio when entering into trades. And number three, very important, examine your financial situation. Again, only you know your financial situation. I don't. The other people in the group don't. Only you know that answer, and only you should be responsible for that answer. Consider your current financial position, including your income, expenses, savings, and other investments. Your financial situation can influence the amount of risk you're willing and able to take on. If you get yourself into a big hole from the get-go, you're not going to feel very good because you're going to be playing catch-up the whole time. But if you have a plan going into it, then it's a lot more easy to manage your success or your failures. Also, another big one, review your time horizon. I can't tell you how many times I see people get upset because they buy something that expires in, let's say, July or August, way on down the road, but then on day one of getting the investment, they can't handle the fact that the investment goes against them 5 or 10%, and so on and so forth. Determine the length of time you plan to hold your options positions. A longer time horizon may allow for more aggressive risk taking, while a shorter time horizon may require a more conservative approach. Now, number one is the most important and the only thing the Discord can't do for you for now. Once we get, the new technologies like ChatGPT 4 plugins and things like that, there may be a way to incorporate a risk management situation for the group members to have their risk automatically calculated for them. But for now, we do not have that, so you're going to have to take the responsible approach and put in a little bit of effort to ensure that you protect yourself and your capital. Now, risk management. Analyzing risks. Once you've identified potential risks, assess their likelihood and potential impact on your portfolio. This analysis will help you prioritize risks and determine which ones to focus on. You can use tools like automated feeds, data streams, data visualization, peer-to-peer speculation, paper trading, all of which we have in the group available to you. And here's some pictures of the example feeds and commands at your disposal. Now, developing a risk management plan is also important. Create a plan that addresses the identified risks that you determined. This plan should outline the steps you'll take to mitigate each risk and the resources needed to do so. Risk management strategies for options traders include position sizing. Limit the size of each trade to a small percentage of your portfolio to minimize the impact of individual losses. If you're really tight on cash and a play comes in and you're not 100% certain of why you're entering into it, don't blow your load in the play. Be conservative, go slow, and try to learn and study what's happening to the position while you're holding it. Stop loss orders. This is crucial. If you are unsure of the play, especially, always set a stop loss. Give yourself a exit strategy. So basically a stop loss, if you enter in a trade at $1 a contract and you don't want to lose more than $20 per contract on that trade, you would set a stop loss at 80 cents. If the contract drops to 80 cents and the price goes to that point, it's going to automatically trigger a sell order, saving you 80% of your portfolio or your position, and you lose the 20%. Much, much better than taking a nap or forgetting about it entirely and then waking up 2 days later or checking on it 2 days later and you're down 75, 80%. That's more times than not, that will not recover. Now, I know that there's the argument for, well, if I set a stop loss, what happens if the stock moons right after? Or what happens if my puts, the stock tanks right after I sell my puts? That's just part of the game. More times than not, that will not happen. Does it happen every now and then? Yes. But the key to remember is to keep a level head and don't let that FOMO Jenkins get to you. You have to be in control of your own psychology and you have to stick to a plan if you so develop one. Another thing is hedging. Now, this is, a tactic to use when you get more accustomed to how options work and you're comfortable with both directions. If you're playing options, it's a good idea to hedge, especially if you have longer dated expiries, because what this is essentially doing is protecting yourself against violent swings in either direction by exposing yourself to both directions. If you have a call and a put and they expire relatively close to one another, if the market goes up, your put's going to lose value, but your call will gain value. If the market goes down, the put will gain value, but the call will lose value, and so on and so forth. It's an equilibrium, ebb and flow kind of thing. And then lastly, this is a crucial step, monitor the implied volatility of your options. Keep an eye on implied volatility to avoid overpaying for options and manage exposure to large price swings. Now, this is another common misconception that I see all the time. How do you judge an option's implied volatility? It varies from ticker to ticker. An IV of 150% could be extremely high for one stock, but it could also be extremely low for another. So how do you determine which is which? Well, this is where more tools from the Discord will come in handy. IV percentile is one of those things that you can utilize in the Discord to gather whether or not the option has IV that is high or low. It's just /IV percentile. And if you see a IV percentile return of 20%, that means for that particular stock, the IV is currently low. If it comes back and it's 100%, that means the IV is high for that ticker. And obviously, when you're entering into a trade, you want to monitor and adjust as needed. You don't want to blow your load all at once. Yes, I know it does suck when you buy only 2 contracts of something and then it goes to the moon and you leave some money on the table, but the good news is you still made money and you didn't lose anything. So the key to keep in mind here is that although some trades do go straight to the moon after you enter into them, it doesn't happen all the time. In fact, it happens a lot less than it actually does. So as long as you remain consistent with your risk management practice, you will start to see better results, guaranteed. Regularly review your risk management plan to ensure it remains effective as market conditions and your portfolio evolve. Make necessary adjustments to your plan and strategies as needed. That's all we've been doing since we formed this group. A lot of you guys have been with me for about 2 years now. And as you've all known, one thing kind of has been building on the other. We started with core logic, which we still use to this day for those who would like to use it, which I'm going to get into that at the end of this. We have that. We have the specials. We had the smiles come through for a second there. Lol, Yishay. Make necessary adjustments to your plan. Markets don't remain the same. Complacency is not something to have in markets. They are an ever-adaptive organism that you must continuously evolve with and adapt to, as we've been doing for quite some time now. Now, this is how to put this to work. So, ding, special feed hits. You have 2 options. Number 1, scale in, or 2, blow your load. Scale in. Next, you can have an exit strategy, or you can have no plan whatsoever. Obviously, have an exit strategy. Next, you can think respective to your position, or you can think for today. If you're buying a contract for next month, don't get all emotional about today. There's zero reason to do that. Instead of getting emotional about what's happening today, then you could be protecting yourself for those potential risks that you're starting to see develop in front of your eyes by hedging against it, by cutting positions, by setting a stop loss. All those things we discussed a second ago, you can apply in this exact situation. But just holding it and not doing anything about it, the markets do not care about feelings. They will take from you everything that you allow them to take. You must set protocols in place that protects yourself from uncertainty. And then lastly, this is another crucial part of it that you've got to get in the habit of doing. If you're one of those people that just buys the option and you feel entitled to, have gains because, there's a cost associated with the group, that's not what it's all about. We're not here to put money in everyone's pockets. We're here to put money in our own pockets by utilizing the vast sea of resources and tools available to us. Again, I've said from day one, this is not a cookie cutter convention. This is not a hand-holding festival. This is a learning experience and an evolutionary process, which hopefully, and I'm 99% sure that 98% of the people in the group understand this, but just in case there's anyone out there that may not be aware of this, it's all on the individual to make the meat, basically. No one else is going to do that for you, and honestly, it would be irresponsible to assume that anyone else is going to do that for you. We're all adults here. We all have the same tools to use, and we can all use them to our advantage. So these 4 things, if you practice these 4 things, no matter which strategy you want to run with, you're going to see better results, period. It's just a fact. If you manage your risk, you will be shocked at your portfolio's health. If you just do this for, let's say, 30 days straight, I guarantee you'll see improved results in 30 days if you just practice these 4 things. If you enter into a trade, every trade. Now, what if you don't feel comfortable entering into, let's say, the special feed? Well, perfect, because then we have paper trading and a multitude of other option strategies or stock strategies for you to run. So, and here's another thing, because remember, we do have tools, we do have technology, we have I can't stress this enough, we have the ChatGPT Plus in Discord. This is a paid-for service that we all have access to that we can utilize to our advantage. So in this example here, I'm typing to ChatGPT with the command. I'm saying, hey, I have $500 in my account for trading. I cannot afford to lose much. What or how should I approach this from a risk management perspective? And then you type your question to ChatGPT. And remember, you can, as soon as you call the initial command to ChatGPT, Once it replies, you can continue typing to it as if it was like another member in the chat. It'll just keep replying to you until you say stop. So it comes back with basically everything we just talked about. As the general rule of thumb, it is recommended that you never risk more than 2% of your trading account balance on any single trade. Based on that, with a $500 account, risking 2%, you should aim to not lose more than $10. Use a stop loss, diversify your trades, keep an eye on your leverage, stick to a trading plan, basically everything we just talked about. Don't forget, we have this available in Discord, and everyone's welcome to use it with no limit requirements. You have unlimited use of this at your disposal. And, not for just trading. If there's anything in your personal life that you want to utilize this for, by all means, go ahead. That's what it's there for. That's, the whole point of this is to jam pack this mofo with so much freaking value that at the end of the day, all you should be worried about is just making that small initial cost back in a month, which should not be a challenge for basically anybody. If you stick to a plan, stick to risk management, you should be able to make the membership contribution back very, very easily in a 30-day time span. Here's another example here. And this one, I'm actually going to show you how to use the core calls and core puts commands. So let's say that ever since we ran core, you really have been hitting it good with core. Just because the group, most of us have gone towards another direction doesn't mean you have to follow us. You can do what works for you. And that's the beauty of this group, is there's so many tools that we have. You can find the best one that works for you and then utilize that. Do what works best for you. Everybody's different. Everybody has different trading strategies. Everybody has different personality, and everyone may have different things that work best for them. In this case, if you want to do core, very easily find the plays by doing /core puts or /core calls. If you need to learn the criteria for that, there is channels set up in Discord for anybody to go and learn the criteria, and you can use those whenever you'd like. And there's several other videos that are in Discord as well, from psychology to trading mechanics to market mechanics, SEC filings. Basically everything that I've covered from 2021 until now is all in there for you to use whenever you need it. And that's risk management. That's basically it. And now I know it's kind of a mundane topic, but it's really something that we've got to get down. This group has grown so much in the last 2 years. Like, again, I've seen so many of you guys go from helpless to self-sufficient, and it amazes me to see, because, it's like watching somebody grow up, and I love it. I love everyone in the group. You guys are amazing. Keep at it. This is not an easy game. If it was easy, everybody would do it. Everybody would be good at it. But the fact is, most people suck at it because they don't do simple things such as study, analyze, develop a plan, stick to that plan, execute on that plan, and remain consistent. If you follow everything we've talked about in this video so far, I guarantee you will start seeing better results. And with that, I will leave this one to you. I do have some more stuff coming to help you utilize some more tools and things like that. But let me show you the IV command real quick. If you want to get this IV command to judge IV /IV percentile, type in the command. Let's just do GME, for example. And then boom, this is your output. So as we can see right here, GameStop has not had a lower IV basically in the last 360 days. That is very telling. 6 months ago, this was extremely high. So as of GameStop right now, the IV is extremely low compared to its historical self in the last year. So whenever you're entering into any play, this will be a good command to utilize, is the IV percentile command. So you can actually gauge the IV and if it's high or low, depending on the ticker. So anyways, hope this helped. Let's see what happens today with the indexes. We got Fed minutes. And y'all have a good one. I'll get more out that will hopefully help you guys utilize some of this stuff a little bit easier.